Good morning, ladies and gentlemen. Let me introduce myself, my person. I am Novia Memunato with NPM 20.0102.0018, and my person is Lulu Ulkasana with NPM 20.0102.0017. We are from Group 10. Within the content: 1. Tangible assets and intangible assets. 2. Derivatives of intangible assets. 3. Importance of intangible assets. 4. The importance of reporting on intangible assets for the company. 5. Relevance of tangible assets to financial statement. 6. Method of valuation of intangible assets to the company. 7. Example of intangible assets. Tangible assets. Tangible assets, physical items that value to your business. Tangible assets equal cash, land, equipment, tools, and inventory. Tangible assets can typically always be translated for some monetary value to be liquidity of different markets will vary. Tangible assets are the opposite of intangible assets, with theories value rather than a transition gains value. Tangible assets can be further broken down into categories: current and fixed. Current assets, a liquid item that can easily be converted into cash within 1 year. These assets are more liquid than fixed assets: cash, inventory, and account. Fixed assets, on the other hand, are long-term assets that cannot be converted into cash within 1 year: building, land, equipment.
Characteristic of tangible asset. When assets that have a useful life of more than 1 year. Tangible assets are non-current assets that have a useful life of more than 1 year and appear on the company's balance sheet as property, plant, and equipment. 2. Depreciable asset. Except for land, this type of asset are depreciated to reflect wear and tear and depreciation as they are used. 3. Assets that are used in business operation and provide long-term financial benefit. This type of assets are used by companies to produce goods and services and generate income. They are not sold to a customer or held for investment purpose. 4. This asset is not liquid. Tangible assets are non-current assets on the company's balance sheet and cannot be easily converted into cash. Characteristic of intangible asset. 1. Not tangible in real life. Of course, as the name implies, this asset does not have a form and existence that can be seen directly. But even though it does not have its form or existence, this asset has an important role in the running of a company. Companies can start to develop and expand the market if the intangible asset have a high value. 2. Cannot be categorized as a financial instrument. This intangible asset can be measured by their long-term value and nature. Income received from the type of asset is received in the future. The value of this asset is also obtained from the claim. Then cash will be received by the company from the subject who claimed the asset in the company.
Importance of tangible assets. This type of asset is essential for any company. Apart from being used to help businesses generate income, they are of great concern to investors when deciding whether to invest in a company. For example, the tangible assets to value ratio is used to determine the efficiency of tangible assets in generation sales.
The importance of reporting on intangible assets for the company. It should be noted that every company is required to report the amount of revenue to the government for the purpose of paying taxes. Reporting on income has been regulated in Financial Accounting Standard (SAC) and Government Accounting Standard (SAP), which support the good corporate governance. GCG, program with the aim that the management of a company can be better and can provide a sense of security to investor. The income recognition requirements according to the Financial Accounting Standard SAK are somewhat more stringent than those according to the Government Accounting Standard SAP.
Relevance of intangible assets to financial statement. Intangible assets have certain implications of the company financial statement. Here is the relationship between fixed assets and several types of financial statement. 1. Planned assets. Intangible assets are capitalization process. When companies buy a fixed asset, they record the cost as an asset on the balance sheet instead of financing in the income statement. 2. Due to the nature of property, plant equipment asset in the company operation to generate income, property, plant and equipment. 3. Tangible assets are also property, plant, equipment.
Method of valuation of intangible asset in the company. As mentioned in the previous section, intangible assets are fixed so that to provide an assessment of this asset is carried out into consideration. These two considerations are consideration regarding initial cost and amortization. You can see an explanation of the two consideration of the valuation of intangible asset in the following explanation. Using these two consideration, the final assessment can be made of the intangible asset owned by each of these companies.
Example of tangible assets: 1. Soil, 2. Machine, 3. Building, 4. Free trees, 5. Furniture, 6. Computer hardware, 7. Tool and material. Example of intangible assets. Intangible assets are 1. Pens, 2. Dermax, 3. Copyrights, 4. Friends, garments, 5. Goodwill, and 6. Other bonus contracts. Thank you for listening to the presentation. I hope we have served for be beneficial for all of us.